This example begins in a very similar way in terms of structures to the previous example, except in this case, the double bottom characteristics are in a much more compact form factor. Relevant short-term resistance can be marked quite easily with these last two downswing points in the downtrend. These details are also quite close to the Fibonacci retracement levels that are based from the peak to the lowest point of the double bottom range. Since the structure is compact, swing points are close together. And since swing points are close together, using a regular Fibonacci time zone is the best option, compared to a trend-based Fibonacci time zone using this same structure, because a regular Fibonacci time zone does better with these shorter intervals. Although price doesn't directly contact this intersection, it's quite close and unsurprisingly leads to more short-term bearish candle patterns, and in general just more neutral to bearish movement. Yet despite this, price still holds over the lower boundary of this resistance range we marked earlier. And here's another example where realistically price won't always contact every intersection but can get quite close in terms of the formation of the actual reversal point. Interestingly, here when there's actual direct contact with price and an intersection, it's in the context of short-term support that is actually quite important in halting the early drop and leading to a fairly swift bullish continuation. At this next area of interest, the uptrend is halted temporarily and demonstrates yet again that these areas don't always have to lead to full reversals. Now here's a clear and sharp reversal right below a Fibonacci time zone line intersection with the popular 1.618 extension level. When there's a fairly wide range between levels, it can be useful, especially with extension levels, to check the option for these less popular 1.272 and 1.414 extension levels that can fill in the detail between 1 and 1.618. As usual, a trend-based Fibonacci time zone is best used with a longer time range, such as with the duration of this entire downtrend. Then the lines that are close to those of the regular Fibonacci time zone can be used to form more approximate ranges of interest instead of just relying on narrow intersection areas between Fibonacci time zone lines and Fibonacci retracement and extension levels. This can be more practical and useful later on, especially when regular Fibonacci time zone lines and trend-based Fibonacci time zone lines begin to spread out more drastically. We can do the same thing with a shorter trend-based Fibonacci time zone and look for consistent areas of overlap. Intersections with just one single Fibonacci time zone or trend-based Fibonacci time zone line aren't necessarily less important, and in fact, like in this case, can actually mark much more clear reversal areas. It's just that in theory, the areas of consistent overlap, or areas where lines from both tools are close together, tend to draw more interest and can help define more realistic ranges rather than just narrow intersection points. And in this case, with a really short trend-based Fibonacci time zone, this kind of method is more difficult and less practical, as there's possibly too much overlap, and/or the lines are crammed too close together to mark any clear or meaningful time ranges.